talks to sell Sara Lee to a Brazilian company have hit a snag. Bloomberg senior deals reporter Jeff McCracken has this exclusive story, and he's here with more. So Sara Lee, we've been talking about them for a while, trying to make sales, specifically with this Brazilian unit. What's happening?
Right now, so they've been in talks for months, and I think they've agreed on most everything but price. Now, that's a big thing to not quite have an agreement, right?
The main thing, right?
So the offer from JBS is actually lower than where the shares have been trading recently.
JBS is a Brazilian meat company.
Right. They're basically a big butcher, you know, and it's interesting because you get this Brazilian butcher that would buy not just the meat business of Sara Lee, but also a big international coffee business. So at any rate, their offer, I think, is around $17.50 a share, and the shares have pushed up north of $17.50 recently, like $17.60, $17.62. So the problem, I think, right now for JBS is they're already a speculative grade company. Are they willing to take on even more debt, you know, a few $100 million more to get this deal done with Sara Lee? My view is this is the likeliest outcome that Sara Lee will get this done. I think Sara Lee wants this to happen. They feel like they'll get a higher price from a strategic buyer than they would from private equity, and I think this is seen as a better option than a more complicated move where you would spin out one of either the meat or the coffee business and keep the other as the core of what would then be Sara Lee.
Because there were other parties that were interested, private equity names.
We reported back in the summer that KKR and Apollo both looked at it. I mean, we've written about this company so much, and so have others, because they were selling their bread business, and that went to Bimbo. And once they sold that, people thought, okay, now they're going to be ripe for a private equity takeover. And amid all this, you had a CEO who had a stroke, and then she stepped down, which has kind of kept this company a bit rudderless, if you will. And they've delayed the CEO search while they try to decide, is there even a company left? Are we going to break up? Are we going to sell? You know, what's the future here for Sara Lee?
So with this deal, with this Brazilian buyer potentially, it's part of that broader trend of the past year of cross-border deals. Do we see that continuing in the new year?
Yeah, cross-border deals has been the trend. What's interesting is they're usually Western companies like the Pepsi deal, where they bought a Russian dairy company, Wimbledon, buying market share, but buying it in growing emerging markets. What's interesting here is that a Brazilian company thinks the U.S. is where they want to come into. So that's a bit different than what we've seen for most of 2010.
We've been hearing that with the energy companies. You know, we had the head of energy M&A on from Bank of America was saying when it comes to the energy space, he's seeing that more of that kind of buying of knowledge, buying of experience from foreign buyers of U.S. entities. Into
the U.S., yeah. I think, so they're not so much buying economic growth. They're buying, as you say, management expertise, knowledge. One area that the U.S., despite various issues, is still strong or still seen as strong is in marketing, its distribution, its understanding of how to develop a brand. And I think that's one thing JBS is thinking is they can take the products they have and they can get this management team at Sara Lee and the distribution outlets at Sara Lee and channel more of their products through into the U.S. market.
So we're staring down not only the new year, but the end of 2010. Is there a rush to get deals done, or now that we have some clarity on the tax front, is that real drive
I think the rush is mostly done. There'll be a few things that'll get done between now and the end of the year, but by and large, we can wrap things up, and it looks like it's going to be up about 18 to 20% this year.
Really?
About $2 trillion in deals globally for 2010. The expectation is next year up another 15 to 20%. I think what's really interesting with M&A is how much it's all about confidence, and we now have a situation where CEOs, I think, feel largely confident to do deals, and it really is the ultimate form of confidence that you're gonna bet the company and spend $1 billion or $2 billion or $10 billion on a big deal. Their concern all along has been the consumer confidence. You know, they're sitting on trillions on their balance sheet. The acquisition markets are accommodating. Private equity is looking to do deals, but the big concern is where's the consumer going? And I'm not sure I want to do a big deal if I don't know where jobs growth and the consumer is heading. But there seems to be, with a stronger retail the retail environment we've had the last few weeks, I think there's a sense that M&A could really jump early next year.
In the consumer sector?
In the consumer sector, but that spreads across even into energy, telecom, what have you. I mean, the consumer's important no matter what industry you're talking about.
No, it's a good point. Then you hope with these acquisitions that the consumer doesn't become worried about losing his or her job, which often happens with consolidation.
Good point, right.
We'll see. Jeff, thank you so much.